Hi, I think we've seen peak inversion of the yield curve. Normally, if the curve stops flattening and starts to steepen, you'd expect that to happen quickly. I don't think that happens this time. It's been quite an unusual cycle, so I don't expect the sort of move to easing that you would normally need for the curves to start steepening straight away. But certainly the forces, I think, that have contributed to this flattening in the US yield curve have run their course. One of the really unique features of this cycle is the way participants in the economy have taken a view about future prospects. The yield curve in the US flattened very early. Businesses took quite a pessimistic view about the economy further out quite quickly. The Philadelphia Fed survey has a 6-month business expectations index, for instance, that is currently at the lowest level since 1979, or in fact was last month. Consumer sentiment, the Conference Board measure in the US, has a future conditions index that has collapsed relative to current conditions over most of the past 2 years. It's consistent with recession and very poor economic conditions. The yield curve itself, of course, has been inverted for quite some months. And in fact, more inverted than during the global financial crisis. We're back to the sort of levels we last saw about 20 years ago during the tech-focused downturn. And also, while the Fed was just starting what to us is still a tightening cycle with quite a way to go, we think Fed funds at 4% by the end of this year. The market spent a lot of time thinking about easing by the Fed starting next year. So there's this really consistent message of early in the tightening cycle, surveys, businesses, consumers, financial markets factoring in quite difficult economic conditions not far away. I think that is what is going to be tested over the next few months, and why the curve, in my view, has probably stopped flattening. We're at peak inversion. I think the market's fear has been, and consumers and businesses, that with this inflation shock, the Fed starting so late in its tightening cycle, the risk was it would over-tighten and cause a deep and nasty and protracted recession. I don't think that's what you're likely to see. And in fact, over the rest of this year, as the Fed delivers tightening and the economy in underlying terms actually continues to do well, I think the market will step away from some of those extreme views. Peak yield curve inversion, I think we've seen. We'll have to wait to get closer to Fed easing, which I think is quite some time away, to start talking about the curve steepening in a more material fashion. Thank you.